Australia and the world economy. How has COVID-19 affected Sino-Australian economic relations? Post-World War II, Australian-Chinese economic relations experienced exponential growth. Before COVID-19, China's trade, tourism, and foreign direct investment to Australia have played an important role in Australia's prosperity. These activities formed the three principal growth determinants in modern economic integration of both nations. However, as a result of COVID-19, relations between China and Australia have begun to deteriorate. Below, we explore how COVID-19 has affected economic relations between Australia and China. We analyze 9 sets of data visualization and show the changes in Australia and China's trade policies, the trade of iron ore and agriculture, inclusive of China's Belt and Road Initiative, and evaluate the tourism sector, its flow of income, and the movement of university students. Changing nature of Australia and China's trade policies. For the past decade, Sino-Australian trade relations were mostly steady. A report published in 2019 by the Royal Bank of Australia, Graph 1 shows that between 2009 and 2010, China had overtaken Japan as Australia's largest source of exports. This number has only continued to rise. Bilateral trade between the countries was estimated to be worth over $105 billion in 2010, with Australian exports to China totaling $64.8 billion. In 2018, this number grew to almost $215 billion. China was the largest foreign consumer of Australian agriculture, forestry, and fishery projects. Published in AsiaLink Business, they explained that between 2017 to 2018, imports totaled around $13.5 billion. Australia had sold more than $11.8 billion worth of agricultural produce to China, totaling to around a quarter of all Australian agricultural exports. Moreover, in the recent years of 2017 to 2018, as shown in Graph 2, China's share of Australian exports tripled, and their share of Australian imports doubled. Consequently, the Royal Bank of Australia concluded that Australia was susceptible to any decline in the Chinese economy. Graph 3, published by Statista in 2019, it can be seen that Chinese investment in Australia was particularly strong in 2008. Although numbers declined, Chinese investment was mostly steady throughout the years from 2011 to 2017. However, there was a drop in Chinese investment by the end of 2018. This signaled a change in China's economic priorities. Published in 2020, Smith and Hale explained that in 2019, China invested $3.4 billion in Australia. This was down by 58% from the $8.2 billion in 2018. Moreover, China had made 42 separate deals in 2018. Compared to the one deal in 2019, Mengniu Dairy's company's purchase of Bellamy for $1.5 billion only accounted for half of China's total investment in 2019. Accordingly, as Needham and Ake explain, for the year ending on December 31, 2019, deals fell from 43% to 42%. At the same time, Chinese investment fell 62% to around $2.4 billion. Following Canberra's calls for an independent inquiry into the cause of COVID-19, we see a sharp decline in Sino-Australian relations. As Clark in 2020 mentions, in June of this year, a new plan was introduced to allow the Foreign Investment Review Board to approve any investments that are categorized as sensitive national security business, irrespective of the value of the deal. This was applied to virtually all businesses. And, as Smith and Hale in 2020 explained, this comes at a time where more Western countries have implemented tighter foreign investment screening measures due to the wary perceptions of Chinese investors of overseas markets. Unfortunately, China views this as yet another restriction on Chinese investment and a reflection of Australia's views towards China.
Trading of iron ore and agricultural products between China and Australia. Prior to COVID-19, Sino-Australian trade flourished. China, being Australia's main importer of iron ore, as shown in Graph 4, heavily supported Australia's economy. This continues to grow, with the total amount of imports of iron ore to China from Australia increasing by an estimated 10 to 12 million MT from April 2019 to 2020. Wong in 2020 states China is also one of the biggest importers of iron ore in the world. Agricultural products such as barley, grain and beef are also other main Australian exports to China. During COVID-19, Sino-Australian trade has suffered, mainly as a result of Canberra's investigations mentioned above. China deemed the investigation to be politically motivated, stated by Mayo from the BBC News in 2020. Mayo also stated China, as a result, imposed an 80% tariff on Australian barley, as well as tariffs on Australian beef exports. This, however, may have large inverse effects on China's economy in the long run, as any disruption to its imports of Australian energy and iron ore will have an immediate impact on both price and China's own supply needs. Many economists have urged Australia to reduce its economic reliance on China, according to Mayo. China, however, plays such a prominent role in Australia's economic success, evident through Graph 5, highlighting China as Australia's top trading partner in both 2016 and 2017, and 2017 to 2018. Trade has also increased between these years by 20.4 billion Australian dollars, alluding to greater reliance on each other in terms of trading goods and services. China's positive influence on the Australian economy can also be seen through purchases of gold grain, particularly in 2019, Australia producing around 8 billion tonnes, China purchasing more than half. At the beginning of this year, China proposed new stimulus measures aimed at promoting construction of new infrastructure, alluding to the fact China will require more iron ore in order to meet these needs. The proposed Belt and Road Initiative, a trade link between different nations, alternatively named a Trojan Horse for China-led regional development and military expansion, further illustrated China's continued reliance on iron ore imports from Australia regardless of current conflicts between both nations. Graph 6 illustrates the paths of this particular initiative, depicting the 21st century maritime Silk Road, the Silk Road Economic Belt, and the Economic Corridor. China is, however, attempting to source iron ore from elsewhere, stated by Tan in 2020. China is attempting to secure supplies from stable markets that do not have political conflicts with China.
The flow of people from China to Australia. In recent years, China has become the largest market for Australian service exports. Education and tourism services are the two largest categories of service exports to China, evidenced here in this chart, which has been used to predict that Australia would likely be vulnerable to a shock to the Chinese economy. Chinese travellers are Australia's largest tourist cohort, with expenditure 3 times that of the next most lucrative market. The Australia-China Business Council estimated that in 2019, Chinese visitors injected $12.4 billion into the Australian economy, dwarfing the next $3.9 billion spent by US tourists. The tourism industry is of particular importance to regional communities in Australia, as 46% of tourism expenditure is spent there. This infographic from a recent study from Tourism Australia shows the total expenditure and economic significance of tourism in regional areas, and has found that the economic importance of tourists is highest in Central Northern Territory, Snowy Mountains, the West Coast and Tasmania, and the Whitsundays, which all have relatively small economies that rely significantly on international tourism. These regions have proven to be extremely vulnerable to shocks in the industry that have threatened the longevity of these communities. Prior to COVID-19, the Australian market accommodating international students accounted for one of the largest economic contributors for the Australian economy, totaling almost $32 billion per year. According to the Department of Education, Skills and Employment, as of January 2020, Australia housed over 500,000 international students, and it was estimated that of those students, 130,000 were employed full-time. This equated to 1.3% of Australia's total employment. However, due to the detrimental effects of COVID-19, the market for international students in Australia is currently non-existent. The lack of students coming into Australia in the last 6-month intake period could equate to a projected hit of up to $60 billion to the Australian economy within the next 3 years. The country's 8 most prestigious universities face the largest loss of revenue, due to their dependence on international student intake. Modelling by Victoria University's Mitchell Institute projects that Australia's university sector will lose between $10 billion and $19 billion between 2020 and 2023, with a further $20 billion to $38 billion in wider benefits to the national economy will also be lost. These projected losses are presented in this graph here. Peter Hurley, a Mitchell Institute Policy Fellow, stated that each 6-month intake of students missed due to travel restrictions would deliver an estimated economic blow equivalent to when Australia lost its entire car manufacturing industry. This lack of intake proves detrimental to China's economy as well. China currently has one of the world's most competitive job markets. China's job market prosperity index has dropped exponentially since 2014, and the surveyed unemployment rate in 31 major cities went up 0.1 percentage points month on month in 2016. Prior to COVID-19, as China began to move away from labour-intensive industries, job opportunities began to wane. As the country experienced growing tariffs from the US and almost 9 million new university graduates in 2019, the job market became significantly tighter. In order to gain a competitive advantage in the domestic market, students from China will often come to study in Australia as qualifications from developed English-speaking nations, such as Australia, are highly respected, often more so than degrees from Chinese universities. Projected impacts of COVID-19 on employment in China may last for 2 years, with high-touch service industries, manufacturing, and small mid-sized companies particularly affected, as the growing lack of university graduates with qualifications necessary to fill positions in the Chinese job market have begun to grow exponentially. Australia and China's symbiotic relationship, which has been jeopardized by COVID-19, has meant that both nations are experiencing significant detrimental effects on their respective economies that may last for the foreseeable future. Undoubtedly, it's evident COVID-19 has had a significant impact on Chinese-Australian economic relations. Chinese FDI into Australia was already falling in 2019, and we cannot know whether this would have continued independent of COVID-19, but it is clear that the Sino-Australian tensions continue to impact this. Agricultural trade from Australia to China has been met with tariffs, yet China's high demand for iron ore has steadily increased these numbers. Australia and China's symbiotic relationship is permanently damaged as a result of the halt to the flow of people from both nations. These detrimental economic effects will be felt for years to come. As we emerge into a world changed by COVID-19, there are many issues both Australia and China must consider as our trade relations become more volatile.